A tax may be legally paid by one person, and economically borne by another. This is precisely what the concept of tax incidence helps us understand. Hello, and welcome to Tax Word of the Week, with Dr Joëlle Traoré. In this episode, we focus on a key concept in public finance: tax incidence. Tax incidence refers to the actual distribution of the tax burden. In other words, it answers a simple question: who ultimately bears the cost of a tax? The person who is legally liable for the tax is not always the one who bears its economic burden. Consider an example. When a tax is imposed on a business, it may appear that the company bears the cost. However, depending on market conditions, part or all of that tax may be passed on to consumers through higher prices. In other cases, the firm may absorb part of the tax by reducing its profit margins. The incidence of the tax, therefore, depends on factors such as the elasticity of supply and demand, the level of competition, and the availability of substitutes. This concept is essential because it allows us to move beyond the legal form of taxation. Two taxes that appear similar in design may have very different economic effects, depending on how the burden is shared among producers, employees, and consumers. Understanding tax incidence means recognizing that the key question is not only who pays, but who ultimately bears the cost. So, in your view, when a new tax is announced, do we pay sufficient attention to who will actually shoulder the burden? Thank you for watching. If this tax term provided useful insight, feel free to share this video and subscribe to follow the upcoming terms. See you soon for a new edition of Tax Word of the Week.